we're going to try and cover this huge topic of crypto and blockchain in the space of about an hour. No pressure, Toby.
Yeah, well, I guess I'll aim to give you the building blocks.
Let me quickly explain how we're going to do this. Toby and I caught up before this this conversation, and we were thinking, do we kill them death by PowerPoint, or do we do this in a very informal way? And we chose the informal route. Hopefully you'll be pleased to hear. So we're just going to have a kind of like fireside chat. So Toby and we came up with a few questions that I personally would like to know the answers to, but a few people before this conversation asked me, a few things. So we're going to include those questions, and just feel free to raise your hand and come in at any time. It's very informal here, but we'll also leave some time at the end to, if you have any burning questions to ask later on. Also in the audience, we have Brenno, who is in charge of revenue intelligence at Ripple. And if you have any questions other than will XRP go up, feel free to ask him as well. I don't think you can answer that question. But we have quite a few traders and experts in this field, but we will cover some of the basics as well, like what is Bitcoin and crypto, but also what is like really up and coming, and that would be such a shame for us not to know that's going on in crypto and also in blockchain. And maybe to look at some of the definitions between like what is blockchain versus what is crypto, because they're interchangeably used and very often got wrong. And then also for me and my trading group here, we'd love to know, like, what are the theories behind creating crypto portfolio? And in your opinion, Toby, like, what is a good platform to use, if you can recommend some? I actually met Toby at my house. He came over for lunch with his mum and dad, who I know very well. Caroline, his mom, is a doctor and runs an amazing children's charity called Dandelion Time that I volunteer for. And they told me that Toby was coming over because he was in London, and I heard all about him. And I heard that he had been working in DeFi for some time. That he was. I'm going to read some of this because it's just hard to wrap your head around all the things he's done. He knows a lot about blockchain. He knows about artificial intelligence and robotics, and he actually co-founded a company called, which is a venture capital analyst company. I don't know what that means, but Toby's going to explain it to us, called Global Corporate. And amazingly, I discovered that he spoke at the World Economic Forum at a summit called Blockchain for Humanity, which is, I work in sustainability. Manal here is also involved. And that I find fascinating. It'd be really interesting to hear from Toby how blockchain and crypto can actually, benefit society, if it will, maybe help with some of those issues that we're having in the financial sector right now. And anyway, so they were coming over for lunch, and I heard about Toby, and I was very intimidated. I thought he would be this super serious finance guy. And Caroline is actually a vegan, so I thought, okay, I'm going to make this huge vegan meal. And I went a bit over the top, made about 6 different dishes, very elaborate. And just as they were coming through the door, I was opening the oven door to find my cauliflower completely on fire. So there I was with my cauliflower on fire, Toby, just about to meet you. But I was delighted to discover that I had nothing to worry about, because Toby is very easygoing and humble and has a way of explaining crypto that is so easily digestible, which I hope will help us today. So Toby, I'm very curious to find out how you got into crypto, because I think you were kind of in the trenches way before maybe any of us here were. And like, when did you get the bug? How did you get into it? And what can you tell us about your business? Because I've had a look on your site, and I've registered like you told me to, and I'm really, really curious about how it works. And I think some of my trading team here will want to know as well. So I know a little bit about you, Toby, but I don't know as much as you know about yourself. So over to you. Tell us.
Yeah, thanks for a great intro, Anna. And I didn't. She's such a good host that I didn't even realize that the burning cauliflower was a problem. But So I've been sort of pretty much sort of majorly focused on blockchain and crypto since 2016, when I set up Novum Insights, which is a research firm of blockchain, crypto, and DeFi. We worked on other intelligence assignments across fintech, circular economy, AI, and those kind of things, but really like just the surging nature of the crypto markets has really meant that we're now spending 98% of our time thinking about crypto and DeFi. And I guess I like most people, I didn't get into crypto early enough when I found out about it. So I think the first time I heard about crypto and DeFi was probably from the Financial Times, ironically, which still hates crypto, but they or some people on AlphaFill still hate crypto, but but they were still covering the market because I think they found it quite entertaining. And it was 2011, and I think there was a column on Lex. So that was the first time I heard about it, and we got discussing it, found it really, really interesting. But I was focused on a venture capital focused analyst firm, so called Global Corporate Venturing. We built a research and insights looking at what the likes of Intel or Qualcomm or Tencent or whatever would be doing with their venturing strategy. So a very, very privileged viewpoint into the venture capital world, and meant that we got to understand a lot of what people were doing. And religiously, I used to always read Fred Wilson's blog and the blogs by Andreas and Horowitz and these kind of people. And I still think that they're like the AVC blog and a lot of the research that's now pumped out by A16Z is some of the best stuff that you'll find on the topic. But so these were very well respected venture capital firms, one founded by Mark Andreessen, the other Fred Wilson and Union Square, sort of early investors in Twitter and these kind of things. And so they were writing a lot about network theory and the sort of new form of money, and they both invested in Coinbase. And I got to the end of sort of the natural growth of the venture capital analyst firm that I co-founded, Global Corporate Venturing, which was a great journey. And we got it to like 600, 700 enterprise customers worldwide doing intelligence. And it's still a very thriving ecosystem. I love that. But the corporate VC world was very formal and rigid, and I was most interested really in the data science analytics angle and how we produced a intelligence and insights for people in a new cutting edge way. And so was keen to do it on one particular technology. And we could have ended up choosing AI or robotics or some other form of deep tech, right? Because there were a lot of trends that we decided to focus on. But just felt that blockchain was a really, really interesting one when we were setting up this analyst firm in 2016, just because there was just so much data being thrown off by blockchain, and especially the public cryptos.
Tell us what are the sort of definitions between cryptography, crypto, and blockchain. What is that?
So I guess the simplest way is to go the best known blockchain that was ever built is the Bitcoin blockchain, right? And so Bitcoin is a blockchain, but there are the so-called private blockchains as well. But I think the easiest thing to do is probably explain how the Bitcoin blockchain works, because it's really easily understood and pretty, it's kind of like the table stakes for this space. And then we can go on to like how the private blockchain system works. And effectively, the Bitcoin blockchain was developed by people working at the intersection of like new digital cash and cryptography, effectively. And so sort of 20, 30, 40 years of experimentation sort of reached a very interesting point in late 2008, 2009, where you suddenly had a sort of a digital money launched into the ether, and it gradually caught people's imagination in a very interesting way. And so as you probably all know, this was developed by a pseudonymous individual called Satoshi Nakamoto. A lot of people think he's one of the major cryptographer digital cash founders of the day, which almost certainly he would be because of just all of the stuff that's packed into that white paper. And I would encourage like anyone embarking into trying to understand the blockchain space to read the white paper. It's a very it's not a very easy read, but it's got a lot of interesting stuff there. And obviously at that time, 2008, 2009, was coming, the white paper was published in the aftermath of the global financial crisis. So it's got some interesting kind of smatterings of kind of anti-establishment stuff that's kind of been great for the blockchain Bitcoin space in some ways, and also kind of meant that it's always been a bit taboo. So it's kind of been part of like the identity. But effectively, the Bitcoin blockchain has some very interesting characteristics, and I think what it's able to do is effectively allow the easy transfer of assets without an intermediary, which I think is one of the characteristics that has led to a lot of the controversy around it, but also like its ease of adoption, right? Because essentially, all blockchains share the lessening of your reliance on an intermediary, effectively. So which is a big reason why even today, and Switzerland is probably one of the more enlightened jurisdictions, but the UK banking system, for instance, is very harsh towards money coming back and forth from crypto, which is interesting, right? But one of the reasons is that there is no real need for intermediaries, although in the crypto markets there are exchanges and various different things that then begin to rebuild some of the elements. But in theory, it can work, and there are many people doing so, just as a line of code that I pass from me to you. And the way I think all blockchains are is effectively a sort of giant databases in the cloud stored on a ledger, and for the storing of information. And so having had and because the Bitcoin blockchain relies on what's called consensus, so sort of effectively whenever there's a sort of a block developed, so sort of effectively the words blockchain come out of a sort of the various miners and there's a lot of detail here, so I might skip over that for a bit, but we can always come back to it if people are interested. I've been involved in a very interesting Bitcoin mining project that's going onto the public market shortly, so I've had an interesting experience there as well. But effectively, all the different computers, the miners, are whirring away to crack a complex algorithm, and then all the computers in the network effectively reach consensus that this that this new block has been built, and effectively so the way imagine it is basically, imagine we are all miners or like on the node, and effectively I would claim that I have solved the very complex algorithmic puzzle needed to own a Bitcoin, and every single one of the room, if you were all sort of having that privileged status because you built that up as a node on the network, you would verify sort of automatically that we actually had cracked the code properly. And so anyway, I mean, there's a huge, like, there's the internet is full of lots of technical detail on how that specific blockchain operates. But the big upshoot of all of that complexity is that it's very secure and very hard to falsify, right? So
it's decentralized because there's this consensus that's reached by people who deserve to have those spaces in the system, right? So that's what makes it decentralized, is because it needs that consensus to be reached. And that consensus can be reached by anyone, anywhere. It could be, you know, cleaner, or, you know, you could be in China, and we'll talk about China in a minute. But you know, the fact that Bitcoin is mostly mined in China now, am I right in saying that? So it is decentralized, but there are areas of the world where Bitcoin is being mined more than others, and the power of the computer is very important. So it's not necessarily anyone who can mine, and that's important to note, isn't it? So it is decentralized because of that consensus, but it's not entirely without sort of privileges, right?
Yeah, exactly. And you need now a huge amount of computing power. But what was really cool about it is, at the beginning, it would be like you could pretty easily mine a Bitcoin with your own personal computer. And I actually there was quite a funny anecdote. I was in in the Google campus for a while, and one of the rumors around was that one of the early crypto teams had basically mined thousands of Bitcoin while at the Google campus on Google's electricity, and they had an enormous electricity bill and couldn't figure it out. And suddenly Google had brought a huge amount of Bitcoins into existence. But
and then well, we've come quite far, haven't we, since Bitcoin was created, and these other coins have come in, and we are aware of, you know, many of them. They're, you know, created every single day practically. The crypto space has grown enormously, hasn't it? And what does that? How does the altcoin space relate to Bitcoin today, do you think? I mean, just looking today, Bitcoin, I think it's past 57,000.
Yeah. No, 100%. So I'll give you my take, and there's lots of controversy around all of this, and I do think we should come back, because we didn't answer your question because of my slightly rambling answer. We should also cover a bit of the private blockchain, because I know that some of your audience was more interested in enterprise and private blockchain, so we can certainly come to that later. But I'll give you a space on the altcoin crypto landscape, right? And it's massively controversial. Like Anna actually hopped into one of the strangest chats I've been into in my life the other day, where there was like people who'd almost taken the sort of Bitcoin singularity as kind of a religious leap of faith kind of thing, and had all sorts
What
of
is
wonderful
Bitcoin
views.
singularity? Could you explain
What?
that? What is
Okay. So the um, the Bitcoin singularity is, a lot of you know the sort of singularity curve from Ray Kurzweil, right? So it's basically the and I'm gonna very quickly summarize this because I'm not sure if I'm 100% technically right, but the singularity is effectively based on, I think it's kind of an extrapolation of Moore's law, or I think of it like that, where effectively in Moore's law there's effectively there was a law of computing speed where it's going to double effectively the speed of computing will double every 2 years is kind of Moore's law, and he was one of the early Intel engineers, and so extrapolating that, Ray Kurzweil then came up with the idea that effectively, well, what the hell happens if the speed of computing is doubling every year? Like what becomes available? And then he's just got this sort of huge parabolic line, which we're heading towards, according to the sort of futurist free thinkers, where everything becomes sort of technical, digital, and we've all got chips in ourselves, and we're kind of passing virtual money back and forth, and NFTs and whatever, right? Like non-fungible tokens, I should say. And the chat that Anna stumbled in yesterday while she was researching this, very diligently, I must add, was about the idea that there's a Bitcoin singularity that's going to happen, right? So Bitcoin is designed so that there are 21 million Bitcoin in existence, and the effectively and so once the 21 millionth Bitcoin is mined, which people predict will be in 2140, no more Bitcoin will come into existence, and the quantity of Bitcoin that can be mined is diminishing. It halves every few years, depending on a certain point being reached, and effectively from there, like there's a whole load of people who are into Austrian economic theory and all these kind of things who think that like Federal Reserve and central bank money printing is awful and to blame for a lot of the problems in society. And so the sort of thesis is, and I don't think it's looking unreasonable at the moment, is that Bitcoin will begin to take over a kind of like the gold standard initially, but the idea is from the Bitcoin singularity thinkers is taking that to its logical extreme. No one would want to hold dollars, euros, Swiss francs, Japanese yen, whatever, right? So it's and they were going very nutty and kind of talking about Bitcoin as a religion and kind of like a manifestation of something, and it was like, oh, that was an intriguing conversation. They didn't want to talk about finance or tech, right?
What I thought was interesting was they said that Bitcoin is like it's a liquid gold. And then someone said, what do you mean by that? Well, it's that gold is a store of value, but it's it's very hard to transact, because what are you going to do with that big gold tablet and transfer it to your friend or whatever? Whereas Bitcoin is a store of value that is, as you just explained, is very contained and controlled. And yet it is liquid because you can transact it, even though it takes a long time to transact, which, in comparison to other coins, right?
And I think it does have, because of that, it's sort of at the end of the day, what is gold? It's kind of like it's a pretty useless metal that has value because other people believe it has value, right? Like, and so Bitcoin has that really rule-bound, easily understood characteristics. So from there, you have there's like one group of crypto who are like the Bitcoin fundamentalists, effectively, and they basically like they're like and like their advice would be, and it's probably actually relatively sound advice as well, is effectively these people will say, buy Bitcoin, hold it, forget about it, store it in a safe place, and that is probably like the first table stakes strategy for anyone looking to engage in this space. Really simple. But then from there, obviously, like people went, this technology is really, really interesting, but it can be better. So Bitcoin is kind of slow to transact in. There's a branch of Bitcoin called Lightning that's trying to make that faster, but basically it's not particularly fast for sending your Bitcoin to someone else, which is annoying to tech people. It means you can't. It means that it's not very good, for example, for a store purchase. It can't work very well for that. But I think Lightning will solve some of those issues. But in the meantime, tech guys being tech guys went, well, we can't just use this thing that you can't even like buy a loaf of bread with or whatever, like, because it's so expensive and not very fast. So they then went and extrapolated. And I'd say like and a whole host of new things came out. People began forking the Bitcoin code base. So basically going, what can we do? And a number of these forks. Litecoin is one. Dogecoin is another. Where basically they copied the Bitcoin code base and basically pretty much set up this thing. And then later on came the two Bitcoin caches as well. All of those are very, very controversial amongst Bitcoin people, and depending on your take of view, that some of them hate them, some of them love them, but basically they were essentially based on the same code base and then moved across. And then I would say probably the most interesting development in the space came in 2015, 2016, which was just as I was setting up my analytics company. And then a very, very interesting guy and a very interesting group of people kind of came together, and you probably all know him. So Vitalik Buterin, genius, kind of programmer, very, very out there on the spectrum. And he brought to light an idea that had been going around computer science circles for many, many years of the smart contract, effectively. So the idea that you can bring logic to money. And I think that is the thing the thing about Bitcoin was it was deliberately like, what's great about Bitcoin is you can't do very much about it and do very much with it, and it's rule bound, right? So effectively, like every programmer in like, and you go to like a Bitcoin core programming meetup, and it's an extraordinary experience. Very, very intelligent people, but they're all very, very just kind of obsessed by the value of Bitcoin and how it works, and the complexity of how the system should work, and they have very, very very controlled ways of improving the protocol. But Vitalik was very early in that community, but then decided that really you wanted like intelligent money, right? So like and that was always kind of what fascinated me, is like, well, if like me, you are running into problems with the bloody London congestion charging, and you end up with $85. All those $85 fine or £85 fines or whatever, all of those problems, in theory, when we're getting to the right rate of technological progress, should go away, right, with the smart contract that Ethereum and other technologies are building in that, and this is still slightly hypothetical, but like the big use case will be for a whole bunch of things that you don't really need to worry about. You just get signed up and go into London through the congestion charging zone, and your bill will get paid through the subscription. You just go, I am happy. Every time I go into central London, my bill will get paid. At the moment, there's a whole bunch of these kind of logical based transactions that are going on. But at the moment, it's still in the building blocks of money and DeFi, which is the space where I spend a lot of my own time. But I think we're we're already at the point where this is beginning to kind of touch real world action. And I think things are going to get very, very, very interesting very quickly.
Could you explain how what you mean by intelligent money? How, in what way it's like dollar not intelligent, for instance?
Yeah, well, so effectively, right? Like, and I think a lot of people, and this is where it gets, a lot of people are very uncomfortable with this idea as well. It's like, how safe is it? Will my account get drained or whatever? But I think we're all confident with the idea of the direct debit, right? This is a direct debit with a logic statement added in, right? So if X, then Y, right? And so Y will happen if you do X action, right? Or if A then B, or however you want to state it. And so if I'm going into central London, London's congestion charging tax will take £10 or equivalent from my wallet, right? That's the big, I'd say in some ways like the holy grail of that smart money. Where that's working at the moment, and the big thing where, because a lot of this stuff was like, and I remember being slightly troubled in 2017, where I'd go to all these Ethereum meetups and crypto sort of deep dives and go around, and like you'd have 200 programmers, and like I'd just be going to people, what's a working use case for a smart contract, right? And they'd all go back and they kind of scratch their heads for a bit, and then they go the ICO, which is the initial coin offering. I just go. So I started to get a bit scared back then, and rightly so, because basically the first manifestation of this was people started building all these kind of token economies effectively, using the one of the, so what Ethereum has is a whole bunch of different different sort of coded tokens, and the most famous of those is the ERC20, which basically means tomorrow still any one of you can find a relatively competent programmer, or even just read a Medium blog post. And I'm not necessarily recommending this. I would say you should work with very strong blockchain programmers. But in theory, you could go out there tomorrow and use the ERC20 on Ethereum and build your own token ecosystem, label it, and go, here's a thing, and now it works. Unfortunately, what then happened was then a whole bunch of people went and go, oh, I want to build like the tokenized Airbnb, or I want to build X. But of course, they hadn't convinced anyone to do any of this. So most of these projects ended up more than 90% down in value, and there was a bit of scummy behavior around it. And so that slightly was the early experimental phase, and the way the Ethereum ecosystem has always worked is it's very much like sort of the kind of Professor Frankenstein's view of finance. It's kind of like, well, let's just see what happens, and then if something bad happens, then we'll deal with it later. That's kind of like the way the Ethereum ecosystem works completely, but in a wonderful way. But it's very anarchic and freewheeling, and always leads to like manias, panics, and troughs, right? But what's then happening is people are then building, and they have done in 2020, I think, really nailed certain use cases that are immensely exciting, and this is where DeFi comes in.
And could you those exciting use cases for crypto, could you give us some examples? I'd love to hear like where you think, not only how are they used, but also you know, with this whole GameStop saga and everything that we've seen in the last few weeks. You know, I think I was saying to you, you know, this has gone public when your mom asks you how trading is going.
No. This is really interesting. So we started the call talking about Vlad Tenev, right? And the and Robinhood, who I'm sure you all know. And so what happened last year was, and this has been going around since 2016. Bancor probably did the first early example of it, but the automated market maker came out, which built the decentralized exchange. So one of the big problems in crypto back in the day was you had a whole bunch of unregulated entities, Binance, Coinbase, Kraken, whatever, right? And shadier and shadier exchanges, which is where most people were interacting with the crypto markets. And one of the major things that really sunk the 2016, 2017 token boom was like these intermediaries just went, well, let's just use our position to take as much as possible from projects, from the users, and still one massive word of warning is like the crypto exchanges have varying levels of safety. Coinbase probably being the safest, and then rippling out. But programmers being programmers went, well, this sucks. So they then went, well, we don't actually need any exchanges. We can just interact using a smart contract and tie up liquidity that way. So people began devising a way of doing automated market making using smart contracts. And so effectively, the basic mechanism, and this is how Uniswap, which is the best known automated market making platform, works, is it allows you to tie up your tokens. So effectively, I can hold a really interesting trade. So you're all a trading group, is you can wrap up wrapped Bitcoin and wrapped Ethereum together. So if you both, like most people interested in this space tend to believe that Bitcoin and Ethereum are at least a good long-term hold, right? And so you effectively, in the last 7 months, we've got like a DeFi calculator on our website, so you can program in. You can effectively wrap your Bitcoin, so it's kind of like a synthetic Bitcoin, which the Bitcoin maximalists hate, by the way. So it's very controversial, and we can move back to some of those issues as well. But you can wrap a Bitcoin, because they would say it's not really a Bitcoin. But you can wrap a Bitcoin, and then you can wrap Ethereum, and put them into a smart contract where effectively you are earning part of a pool fee for providing your Bitcoin and Ethereum into that whole thing, right? So
Is it like holding money at the bank and receiving interest? Is it like
yeah, exactly. So or it's slightly different because you're holding you're basically porting it into a smart contract, but basically it is, all of it is like that. And so what you're doing is you're effectively becoming a market maker. So you're becoming Goldman Sachs or Citadel or one of these kind of people, right? So and so what's really exciting is this is the first time that retail has been able to access the fees you receive for making a market effectively. So do you want to jump in?
No, I was just saying, wow, that's amazing.
And so the way the Uniswap works is you receive, everyone in the pool, the entirety of the pool receives 0.3% of the transactions into that pool. And then there have been various iterations, and crypto being crypto, people have built, there was a very silly food meme going around, which still doesn't seem to die out. And so there's actually been one DEX, which was controlled by Binance, that's overtaken Uniswap, which is now called, annoyingly, Pancake Swap, which I'm sure many of you as MBAs will find very scary, but crypto being crypto is quite anarchic. So Pancake Swap came about, and Sushi Swap also came about, and other exchanges like Aave and Compound, and really like amazing. One that I've been really fascinated by is a group called Badger DAO, that has created a elastic supply synthetic that kind of corresponds to map the price of Bitcoin, and it's trying to keep above the price of Bitcoin. So you can then begin to try and play around with wrapping your Bitcoin and your DIG, this synthetic, and effectively get the trading fees for something that's moving around the Bitcoin price, and something that's obviously stable to the Bitcoin price.
Are you
And
taking
then
value
and
of
you can get
volatility? Are
what?
you picking up the value of it being volatile, of the volatility?
Yeah, exactly, because there's more trading back and forth, right? So if you're providing the liquidity in the trading pool, you get paid every time there's a transaction going back and forth. So it's so like at the moment we're very much in the gamification phase of the crypto markets. So there's huge opportunity really for people who have finance backgrounds, who have an understanding. The way we've been looking at this market is to effectively, like, we're very interested in modeling pockets of risk. So like actually I would argue like the most important the most important function of DeFi at the moment, which it should be interesting and exciting to anyone, is that you can effectively put your USDC, which is a stable coin that tracks the US dollar, or yours that is a stable coin that maps the euro. You can put, I've got like quite a lot into the USD yours stable coin, and effectively you get maybe 10, maybe 20% for providing the market for just people switching between the synthetic dollar and the synthetic euro. Because like coming on to like my one word of warning as people entering this space is it's already massively overheated. But what's super exciting about this point of the market is you can build a you can compose a risk adjusted portfolio, effectively looking at whether you map the US dollar and the euro, looking at and sort of trying to hold those kind of things, as well as holding Bitcoin, as well as holding Ether, as well as what our company does. And it's like it's a very easy tool to plug into, is we just provide analytics on all the different, at the moment, the momentum pairs. So we're looking at like the raciest edge of crypto, like the ones that are going up 100% in a week. But what I think is very, very smart and would advocate anyone looking at coming into the crypto markets is we're looking at 50% holding of stable. So hold USDC, hold yours, and other DAI is another one, like these ones that peg the dollar. And also be careful, because a lot of these things have some inherent risks. So what's widely regarded as the biggest kind of sleeping volcano in the crypto space, and there's a lot of them, is USD Tether, which is has massive links to the Chinese, was very close to one particular exchange called Bitfinex, and the big concern is many people worry that US dollar currency is not really backed by very much, and also it's got into some significant controversy with the New York Fed and others. So sort of certainly a risk is with any of these stable coins that they may lose their peg.
It's actually a perfect time for me to ask one of the questions that I have, which is that, let's say you're not an expert in this field, but you're interested in it and you're doing a bit of research and you want to diversify your portfolio. So you want to have some stocks and, and you want to add crypto. And just to kind of put all of the things that you've described today, some of which I had no idea, like this concept of wrapping, I didn't even know that existed. It's very interesting. If you don't have the time to research this on a daily basis for several hours, what is a really good way, and some of the theories behind creating what you would advocate as a successful crypto portfolio? Understanding that, of course, the market is overheated in some areas and there's always a risk. What is a good starting point for creating a crypto portfolio?
Well, it's really good, and that's why we've kind of set up our tool, right? So it costs £1 to log in, try it out for a week, and then the idea is and then it's like a tiny subscription for the year kind of thing, and then and then we've got like a group of WhatsApp that we're building at the moment. So it literally launched this week. But it's already getting quite a lot of interest. And then what we're going to be doing there is discussing some of those theories and bringing a course out, and basically just building indices, building risk tools. So like and those kind of things. I think what I'd advocate anyone coming into the space, the first thing to do is log on to an account. Coinbase is probably the most secure, so it's a nice one to go in for a first timer. It's probably going to be IPOing shortly. It's been tried to be as compliant as possible. So the first thing I do coming into this space is buy a Bitcoin, buy Ethereum, and then maybe then buy DAI. DAI is like which is quite cool because it's like an interest bearing kind of, it floats a bit, so it's not totally a stable coin. It's an algorithmic stable coin, so it's designed to sort of, it's got another pair called Maker that's designed to help its peg. But DAI is quite a fun one to get yourself acquainted, and you're earning interest in your Coinbase account for holding DAI. And then once you've got comfortable with that, I'd advocate people to set up a MetaMask account, which is like the best known non-custodial wallet. And this is where it starts to get really, really experimental, right? But it's where the most exciting stuff is happening, in my opinion, right? And then, but you can then, like, it will take you, you'd set aside a good few hours, like on your Sunday, to play around with your MetaMask wallet that you download into a browser tab. and then you hook up to an exchange like Uniswap or like Aave or many of the others, and they're proliferating. But we're designing like a group that's designed to be like for experienced people looking at ideas and like newcomers, and then we're building a training course, and we're building like a whole series of blogs on the subject, basically.
So what you're saying is start with Coinbase or something like it. What would the other options be, do you think? What like
well, so my favorite, and it's slightly, this is more on the risque end, but FTX. So FTX allows you to tackle the space with up to 101 times leverage. So don't play around with that button too much, but I'm sure as many of you are traders, you'll really enjoy that because you cannot get that kind of leverage outside of a bank. But FTX is incredible. It's a massively powerful tool. Unfortunately, my one word of warning with both FTX and Binance is they certainly like are playing fast and loose, right? So FTX and Binance could easily get clobbered, like many of like the groups of the past have been. So BitMEX, for example, ran into a lot of controversy. Ripple, for example, as well, like certain things. Amber's on this call, who's my friend. She might be able to send a link to FTX and or she was on this call, but I think she's left. But the Breno might be able to send some links to FTX, but it's www.ftx.com, www.coinbase.com, and www.binance.com. But I'd warn, like in crypto, there's always like volcanoes waiting to happen. The SEC wades in like they have done in the case of Ripple in a slightly controversial way, right? Or in the case of BitMEX. I think BitMEX is in trouble with the CFTC, which is another US regulator.
Is it safer to trade, like to use your usual trading platform? Like for instance, a lot of us here use eToro in the UK. Is it safer to trade crypto on those, accepting the insane spreads, would you say, or not really?
Well, I think, and to be honest, I haven't been dealing much with eToro, right? So I, and rightly or wrongly, what? But the well, I think if you're really getting into the space, you should go native and actually own a Bitcoin and have it move around. And I think eToro might be able to custody it. What I think eToro is, because the UK, although you're obviously in Switzerland, so it probably doesn't matter so much, but in the UK, they've just brought in some laws on derivatives trading. So, but I definitely encourage the more trading savvy people to use FTX, because like it's got everything. It's like a shopping market, but it is centralized. And like one tip in the crypto markets as well, if you're playing around with leverage, which I don't advocate anyone except an experienced trader to do, is like at like weirdly at like 2 o'clock in the morning is kind of like the witching hour, where like basically the US market is coming towards a close, and people are starting to go to bed, and hedge funds mess around and blow through all people's stops and stuff. So it's
so what happens at 2 o'clock in the morning in the US time? Is it what is it, very volatile, or is there a big sell-off?
Yeah, like sadly, what is true, right? Because like think about it, there are all these platforms that allow people to get 101x leverage, and these are still relatively thin trading markets, right? So one of the big problems with crypto is like it is so the Wild West. So if you're trying to day trade the Bitcoin price and use leverage and these kind of tools, like that is really, really out there on the risk spectrum. Like it's, but it's really, really interesting as a market because you can learn its peaks and troughs and how the particular markets perform. So like if you're an algo or a quant or whatever, it becomes like a really, really interesting market. And then, but but I'd say www.ftx.com, I think it's www.binance.com, but just Google FTX or Binance. Those are good ones. Coinbase, and then MetaMask. MetaMask is the browser that I think everyone, if you've got past using a centralized exchange, you should start looking into the decentralized area, because I think it's where a lot of the innovation is going to happen.
What do you think is, I mean, Bitcoin just reached like 57,000 today, probably 58 by now. I don't know how many hours have gone by since I've looked. You know, this is $1 million question, of course, but do you think that, I mean, your own opinion, do you think that is the market insane right now? Is this like, how is this different to 2017? Should we be cautious, or is this actually the best time to get in, or, you know, long term, you know?
I definitely take a risk-adjusted process to coming in, because the like I think you've got to assume that the music will stop at some point, and we will see, like, actually the Bitcoin market fell 30% in January, right? So that's the kind of market that you're talking about. So like almost like the initial trading strategy is like effectively, it's kind of like take a Warren Buffett style approach, buy a Bitcoin, if you can take a Warren Buffett style approach to crypto, buy a Bitcoin, check on it in a week's time, see how you feel about it.
Okay.
And then, but like almost go into it with a 2-year view, right? Buy however much Bitcoin you feel comfortable owning. And if is your first thing into the market, and then go, well, I'll hold it for 2 months, and it might go up 30%, it might go down 30%, right? Like,
So diversify, basically.
Yeah.
Diversify and start. And where do we go for following, you know, once, let's say someone here looked at it, thinks great, Coinbase, that's for me, I'm going to check it out, play with it. Where is a good place to go learning? If you want to have like some insights, is there a great blog? Is there a fantastic speaker?
I mean, the internet is just like full of stuff, right? Like crypto is like the most discussed topic in the world right now, as far as I can see. Like
how do we
other than COVID, right? Like it's like it's probably number 2. So but obviously there's a lot of rubbish being put out there. I think Andreas Antonopoulos is very good. He's really, really good. Andreas wrote the Bitcoin white paper. I'll type his name in because it's quite tricky to spell. And forgive me if I don't spell it right. Antonopoulos, Andreas Antonopoulos. So there's Andreas Antonopoulos. He's got amazing materials. On the macro stuff, there's a guy called Willy Woo. He's very good. Fundstrat's good. Novum Insights, which is our company, has a report on our website. Don Tapscott has a great early TED talk. It's a bit old now, and Don's a bit like he's a bit like your hokey MIT professor. So like, but he's a very good TED talker. I
actually encourage everyone to you know, I promise you, Toby didn't tell me to say this, but really go on to the website, Toby's website. It's so interesting. There is this very easy to use calculator thing, which I haven't started using yet, but that looks really interesting. What does it do, Toby?
So it's specifically at the moment orientated towards Uniswap. So we're focused on DeFi, and you can basically use your MetaMask wallet. And it basically, what's really interesting about that is we're in our scouting out of uncorrelated assets. It basically, at the moment, we're just looking at the momentum pairs. So we look at certain pairs, so or like and find out what are the literally, like this is like the GMEs and the equivalents of that in crypto world. So it's kind of very super high risk, but basically it maps everything that's going up, the biggest returning, and then our analysts look through them and star some of them. And then the tool allows you to look at what's been the best returning over 7-day, 30-day, and 90-day. So what has the most momentum? And so what we've found is now we've got this trading strategy of adding in the stable coins and keeping that 50% stable coin allocation, going towards like the crypto blue chips like Bitcoin, Ethereum, Cardano, Ripple, whatever, right? Like you could build a portfolio of whichever ones take your fancy. So I'm sure Breno could talk a bit about like where Ripple is in their development and that kind of thing. Obviously, the one word of warning with that asset is there is this SEC hearing kind of thing, but I think it's likely that that will be settled. So, but that's definitely a crypto blue chip. And then you've got the and the word of warning about every single crypto asset ever is like that it's hugely regulatorily uncertain. And I think like the great thing for Bitcoin is I think like all the regulators have pretty much given up at this point, trying to sort of really, like, they're very focused on KYC and AML, so know your customer and anti-money laundering. But
also many large financial institutions are now buying Bitcoin, aren't they?
Yeah. And they and what they're really interested in is like so-called virgin Bitcoins, right? So Bitcoins that have gone from a mine to the bank's custody, right? So like you can actually earn a premium for having a bank that has perfect provenance. So like the most valuable Bitcoin is, say I am Credit Suisse and I'm buying a Bitcoin. I go to a reputable Bitcoin miner and have the exact provenance of that Bitcoin. And then Credit Suisse will keep the records for its family office client and go, oh, we bought you 10 Bitcoins and now we're just holding those and custodying them for you. So that's how the banking market's beginning to think about the market.
That's really interesting. So I think we're entering into that exciting period of the talk where people can ask questions.
Okay, 100%.
I've got a question here, which is, what are the main mistakes to avoid if we're a beginner? I would say leverage is the first one, right? Well, what else would you say, Toby?
Yeah, so do the high court, and I'd actually like I really would think, unless you're more on like the risque side, do use Coinbase first, right? The fees are extraordinary, so it gets really annoying, but like, so everyone moves off Coinbase after a while, but like
So Coinbase is expensive.
Coinbase is kind of like it's kind of like yeah, it's kind of like the noobs the exchange, right? Like you just go there, hold stuff, but it's got loads of assets on it, and it's got quite a strong selection criteria as well. So like generally, like if something's on Coinbase, it's been relatively well analyzed and stuff. So like it's actually a relatively safe sandpit to play around on. They just kill you on the transaction fees, a bit like, I'm sure
you pay a bit more, but you pay a bit more, but it's a safer bet.
Yeah, and if the assets are going up 50%, does the 3% fee matter, right? Like I think it's a 3% fee. So like and I think FTX is much lower, and you can buy spot, right? you can buy spot on FTX, so it's pretty good in that way. And it
probably going all in and getting crazy, like putting all your savings onto Bitcoin is the other thing for a beginner not to do. So diversification, no leverage,
yeah,
going all in,
and
and
assess your own risk appetite, right? So like an institutional pension fund investor getting into Bitcoin will have 0.5% exposure to crypto full stop, right? But that obviously ends up being massive if they've decided to do it, right? But then like you can have people like, I'd say a very risky allocation to crypto is 20 to 30%, right? And probably much more traditional is 5% to 2%, right?
So of your overall portfolio of investments, including what you keep in cash, a 5% in crypto is a what you would say is relatively conservative and a good starting point, right?
Yeah.
Okay. We have a question from Cornelia, and I don't really understand it. Cornelia, would you mind saying it?
Yeah, I get it, but feel free to express it.
Yeah. So I just understood that Coinbase probably is having or is something similar with their products as the blue chips are.
Yeah, exactly. I think so. So in the so effectively they're pretty good at vetting, and so like they've got they get some really interesting projects, and so the reason why, and I'll tell you the reason why you don't want to be like, that's a slight problem, because like effectively you're getting it after everyone else in the market, and it's a relatively illiquid. So so basically you're getting mature assets, so you're taking less risk, but you're basically getting them when they're $1 billion market cap, and that project will go up 10, 20, 30% in value when it's announced that it's being listed on Coinbase. So it's kind of like being when Tesla was ushered into the S&P 500. It's kind of like that in the crypto space. So, but you're 100% right. And that kind of nails down like the risk appetite is better. But then if you think about it, these assets are all inherently risky. So maybe the blue chipification is actually less valuable than something entering the S&P 500, because it could turn out that there's a massive accounting scandal at this Mickey Mouse startup that suddenly got $1 billion market cap and it goes to 100 million. So like, I think it can, maybe the thing with Coinbase, it can give you the appearance of de-risking it, but arguably there's more risk. So.
And then Esther asks, any word around Binance or Cedar or Revolut?
Yeah. So Binance is like, I mean, like the CEO, like Binance has been extraordinary, right? So they have like been one of the best executors in the crypto space in terms of like their founder, CZ, really interesting thought leader. The one word of caveat, right, is Binance is so aggressive in like jurisdiction and regulatory pushback that I think it's going to really, really hurt them, right? Like because they haven't, so like they kind of like, Binance is always hopping its headquarters. So I play around with Binance because it's a really, really good platform. But I think like Tether, I wouldn't have too much on Binance because it is kind of like, it's kind of like the supermarket of it, and it is the maker. So I own the BNB token, which is the token behind Binance. I also own Cake. So Binance has now blown out of the water Uniswap, which is like where Ethereum is, by charging much lower fees. And they built this thing called Pancake Swap. and with a I mean, it all gets very crazy at that end of the market, but like they managed to build a decentralized exchange with very low transaction fees. So Binance, hugely innovative company. I think at some stage they're going to put a foot wrong. So don't have too much on Binance would be my.
What about Revolut and some of the other?
Oh, Revolut. I mean, like Revolut is holding. So effectively, what people dislike about Revolut is basically you're not really holding a Bitcoin, but what's obviously really, really convenient. So basically, you're holding effectively a synthetic Bitcoin on Revolut. But yeah, obviously, it's an easy place to buy one. What's happening is you're not actually like all the fun of the Bitcoin space and the crypto space generally is you're able to kind of wire stuff over from one wallet to another, and both Bitcoin and PayPal and these kind of places, I think both Revolut and PayPal don't let you wire your Bitcoin anywhere else, right? So effectively, and Revolut is very, very explicit. They don't even have the Bitcoins backed, right? So that's slight heresy in this space because they're holding effectively a synthetic Bitcoin and telling their customers they own.
There are quite a few questions here about
what?
sort of fees, and we've had loads of conversation in my trading group about fees and spreads and stuff like that.
Yeah.
Is there like a website which has a table which compares all the fees and stuff like that for all of these exchanges? No. That would be great.
It'd be good. Well, we can as we're pumping out content to help people, we should do that at some stage. But I can tell you the rough thing is Coinbase is easy to understand for a beginner. FTX is really low fee, really good on fees, because what they've developed is they use the FTT to subsidize the fees. Binance also, I think, is pretty good on the fees. They're all terrible on the fees, though, right? Like, because it's like they're all the picks and shovels people in a gold rush, right? So and then the decentralized exchanges are also pretty bad on the fees. I'd say that I know of, FTX is the best one for fees.
Okay. There's another question from Luca. There are a lot of talks going around that the second generation of cryptocurrencies will take over and replace the existing ones. Do you think that this could occur in the near future? And do you look at it as just speculation for now?
This is kind of a really good question, right? So the question is, are we at the Yahoo and AOL side of cryptocurrency, and Google is sitting there, right? Like, possibly, because that's the way technology works. What I would say is at the moment, like, I think, so if Bitcoin were a company, it would have been the fastest growing company to $1 trillion market cap of all time, right? Like, I think after the next fastest was Google, right? So and I think Bitcoin did it in 12 years, and Google did it in whatever 20 years. So which is quite intriguing. Then you've got I think Ethereum, like there are many more developers, like hundreds of thousands of developers building on Ethereum, and it's fast growing in its life cycle than Bitcoin was. So I think there's a very good argument that Ethereum will reach $1 trillion market cap sooner than others. Then you get to the really interesting space, right? And by the way, everything I'm saying here for like the Bitcoin maximalists is heresy. And they're like, buy Bitcoin, but I really don't believe it. because that's not how tech and innovation works as far as my understanding of it is. And so but I think Bitcoin has got the brand and the use case and the thing that it's become almost like the reserve currency of crypto. And that's a really, really exciting thing. And it's taking on this gold sway. But I think Ethereum will really come up. And then you've got a really, really interesting war going on with the so-called Ethereum killers, right? And those are Cardano, Cosmos, Avalanche, any number of them, Tezos, and I think all of them though have all of them kind of have that baked in the price and nowhere near the traction, right? So it's a really, really good market to trade, but inherently a high risk market. However, what is really, really interesting, and I think arguably BNB is the first rival blockchain that's doing it with users and those kind of things. So BNB is Binance's coin, and it's built its own blockchain, and it's now launched its own decentralized exchange. And so now people are able, and what they've done is, the big problem with Ethereum is that at the moment, there's a layer 1 on Ethereum where you need to pay gas fees. So effectively, to move something on Ethereum, every time you're moving something on Ethereum, you need to pay the miners what's called gas to move stuff around. And every time there's a hype around crypto, gas fees go up massively on Ethereum. So Ethereum is kind of always ends up becoming a victim of its own success. So I think there's a very, very good mechanism for people to want to move to these other rival blockchains. And BNB arguably has done the first with PancakeSwap, which just kind of flipped Uniswap as the main DEX. You're seeing one of the first real user-driven overtakings of one of the major cryptos, right? And Breno can maybe talk about the banking market where Ripple's made some headway, and there's lots of complexity and lots of interest.
Breno, could you talk a little bit about how the banks are getting involved? Oh, maybe he's not there right now, but we can ask these other questions.
And well, yeah, I wouldn't worry about it too much. But essentially, XRP and Ripple worked on being a tool for the interbank market, and they're using so they got a lot of traction.
Yeah,
due to that.
Sorry, I was on mute for some reason. I'm happy to jump in. Hey guys, hi Toby. Hi Anna.
Yeah, it'd be much more sensible for Breno works there. Hey.
Hi. So yeah, we basically, the main use of XRP from Ripple. I mean, Ripple's company, our main purpose is to find utility for XRP in different ways. The main use case that we've been working on is basically moving money internationally. So in fact, using XRP as a exchange currency from fiat. So if you have dollars and you want to buy another currency, it goes through XRP, and that's how we use with banks. So if a bank today, they want to convert currency between two different, especially for exotic currencies, is very complicated. So normally they have to hold both currencies in a nostro-vostro relationship, where they have to basically put aside a lot of money. So we solve that by allowing them to buy in real time using XRP. So that's mostly why they're using us for. Yeah.
Cool. Right. So we have some more questions, which is I think from Leo here.
Yeah.
Shall I read them out so that, will traditional finance markets such as the Forex, the stock market, etc., even run on a private blockchain? is that a possibility? What are the issues that there are with that?
Okay, so the really good questions. I mean, obviously, like you guys are in Switzerland, and the STX is probably the most advanced project in the world, right? For bringing a private blockchain to traditional markets, and they're running on R3 Corda. Which is essentially, and this is where I did do a disservice. I knew we were meant to talk about private blockchains, and we've spent a lot of time analyzing that market as well. But I knew you were a trading group as well, so I thought like a lot of people wanted to talk about crypto. So essentially, the private blockchains are the one of the issues with Ethereum and Bitcoin is every single trade that you make is public. And so various private blockchains have been developed. The best known are R3's Corda and Hyperledger, which is built by the Linux Foundation and being largely pushed by IBM. That's been a really, really interesting development, and they've been Hyperledger and the like have been working on various different consortium, and they've been working with Maersk, they've been working with SIX, the Swiss Stock Exchange, on STX. They've been transacting there was actually a bond issue done by Daimler using a private blockchain. I think they actually, ironically, the blockchain team at Daimler used Ethereum because and then found a private way. Like there's actually an enterprise Ethereum where you can add privacy to Ethereum and and it's involved. There's Consensus, who are working on it, have with Hyperledger have come up with this thing called Hyperledger Bezu, and there's lots of being like enterprise software. There's lots of funky names and complexity, so they can charge people more money. Being cynical, but I think it's a really, really exciting market, and it obviously is going to do different things, right? So we're looking into sort of the supply chain area and how people work across that. So in a short answer, I think 100% yes. I think luckily you guys are in Switzerland. Switzerland never had a junior market, really. Like there's no aim, or I don't know if you could really call NASDAQ a junior market, but like there's no go penny stock Wild West area of Switzerland. And
well, Lee is actually in, I think he's either in Malta or in Germany. Okay. I think he's German in Malta. So
okay.
I'm in Malta.
Okay.
Yeah. Okay, so but I think that okay, so sorry, Leonardo. Okay, I was talking a whole bunch of Swiss examples, which probably not very good. But yes, 100%. And I think that FTX has probably spent definitely tens of millions and rumored to be 100 million on developing their private blockchain. I think it's thanks for coming, Manal. Yeah, no, I think that yeah, I mean, we know a lot of the people working on this, and there are exchanges being developed. And I think that what's really, really cool is like your and at the end of the day, right? Like the way we've talked with a lot of the banking groups is when this market reaches maturity, the London Stock Exchange and NASDAQ OMEX and whoever are going to anoint the winners, right? So like, but yeah, 100%, there's lots of things being played around with. There's early experimentations in the bond market. And there was a really, really cool thing. I was chatting like with like the idea that you could bring automated market making, which isn't exactly rocket science, onto like the LSE or onto SIX, right? And then you could just wrap up like a bond, because it doesn't need to be that. And you could have like the Novartis Roche pair and trade between the two of them or whatever. Or maybe what might be quite interesting is if you think like there's a, like the way automated market making typically works, and there's quite a good article on our site on it, is like the greater the variance, the worse it is to be a liquidity provider in that algorithm. So if you could figure out that basically Merck and Roche were like typically like 5-6% variance between them, and one was up, one was down, they make a really good trade for automated market making. And there's no reason why you wouldn't want to bring a lot of the great stuff that's been developed in the crypto world into existing finance.
So we've got a few questions from Leonardo, which what do you think of the blockchain of Microsoft Azure? And then what is Reef and how does it work? And then I think our final question will be from Luca. So, but I'll let you answer the Microsoft and the Reef one.
Microsoft Azure is a bit like the IB is like, it's like the Microsoft equivalent competitor to like IBM Hyperledger. I mean, it's I think they might lose IBM Hyperledger, but like all of them, all of the big software vendors, also Oracle's doing a lot. I'm sure like you chat with Accenture, you chat with anyone, and like they'll have McKinsey or what, like it's whatever happens in enterprise tech is happening, right? Like it always happens, and like you can go to Microsoft or you can go to IBM and they'll build you your blockchain, and you can chat with McKinsey and they'll help you pull it together, right? Like that's and then it's I guess as ever with those things, they're often a eye-wateringly expensive vanity project until they're not, right? Like so like
and what is Reef? That was his other question.
Oddly, I don't know. I have to admit, like I've not, as you can probably guess, I haven't been spending most of my time assessing the next things in enterprise blockchain. Okay, Reef Finance is actually a decentralized finance layer one. And this is the nature of how much things are going. Looks interesting, looks really cool, looks really frontier. I don't know it, so okay, well, if I don't know it, it's relatively obscure, is what I would say.
If you hear anything, let me know, and I'll let the team know.
Yeah, we can.
Final question from Luca, which is: do you think that the banking system will adopt blockchain platform in the future, since there is a surge in people who prefer to trade on the blockchain platform, or if the current big banking players do not move to the platform, do you think that new players will emerge with the standpoint of providing services via blockchain?
Okay, so what is 100% happening, right, is that a lot of the banks are figuring out how to custody Bitcoin, and so it's definitely worth people looking at the videos. He's a bit nutty, but Michael Saylor of MicroStrategy. So Michael Saylor decided to denominate his company's kind of the way they did their accounting in Bitcoin, and then is basically turning a relatively unknown kind of Gartner type organization into kind of like Bitcoin religion. And so he's bought billions of dollars of Bitcoin and taken out, or soon will have bought billions of dollars of Bitcoin and taken out all these kind of debt to buy Bitcoin, right? And then Michael Saylor's been going around on a roadshow to all of the major enterprises, basically advocating, hey, don't have your reserve as the US dollar, and essentially moving to Bitcoin. So MicroStrategy at the moment is a real hardcore outlier that has kind of decided to pretty much go 100% crypto in how they're living stuff, and he's proven really visionary, right? Like the guy is perhaps one of the people single-handedly behind this current rally, right? Like he's I think there's the huge pace of innovation, but him deciding to put their currency reserves into Bitcoin really give a leg up. The next move that gave a big leg up to the market like a week or two ago was Tesla putting in $1.5 billion. And then suddenly, like, Elon Musk, most recognizable businessman in the world, is like tweeting about Dogecoin and Bitcoin, and Dogecoin awfully is a joke named after a dog, but I think it's kind of cool that the world's richest man would play around with it. But like at the same time, it's classic Elon, right? Like the guy's a master showman, and it's not helping with. And so going back to traditional finance, you do have a bunch of the major banks, Standard Chartered, Deutsche Bank. A lot of them are figuring out how, and have figured out how to custody back Bitcoin. Because essentially at the end of the day, right, like a lot of you are in Switzerland, Credit Suisse and UBS and the Canton banks, their job is to serve their family office customer, right? So like they basically, imagine you're in the wealth management division of Credit Suisse and go, well, like some billionaire walks in and goes, I want you to custody my 100 million Bitcoin. You look after all my other stuff. At the end of the day, what does the bank do? Do they go, well, we'll let UBS look after that, but or not? And so the banks, just by pure market need, they need to service the market, because like as long as they can get regulatory character, which they have in most jurisdictions, they will. And so like that's what you're seeing at the moment is suddenly like, and that's probably a bull signal for Bitcoin, because if you think about it, Tesla just did its announcement 2 weeks ago. The Saylor Roadshow's just really been going, and he's pitching like most of the Fortune 500 treasury departments. You should hold like 5% in Bitcoin, or 10% in Bitcoin, or 20% in Bitcoin, or 100% if you're Michael Saylor. And that is really interesting. And he's a very compelling speaker, so you should listen to him in a slightly nutty way.
Would you mind writing his name there and the name of the platform?
Yeah. And already Elon is getting into trouble with the SEC because he moves the market daily in Bitcoin and Dogecoin and whatever, right? Like by saying something stupid. And he's such a...
It's very amusing, the whole Dogecoin thing, because just the meme is so funny. I love that little dog.
Yeah, it's wonderful. I think it is wonderful. I mean, it's slightly... it's not the easiest thing for legitimacy. And then I guess there was a second part to the question that I didn't really answer. So 100% the banks are going into crypto, and 100% they are building their blockchain, their own blockchains to service other markets, and that's happening. And then you've got Libra, which is being developed by Facebook, now DM. So Libra was better known, but it's now become DM. And gradually you're just going to get, I mean, it's just tech at the end of the day. Tech will be experimented with in all sorts of different ways, and there's lots of different use cases for it.
We have to wrap up because we've kind of gone a little bit over time, just a bit. We plan to talk for an hour, but we've been there for an hour and a half. Toby, I could listen to you talking about this topic forever. It has been so interesting. I feel like what we've seen is just the tip of the iceberg of all the knowledge that you have. And it's just been amazing, really. Thank you so much for opening my eyes, certainly, to some of the things that I hadn't even heard of, but also filling in some gaps. So yeah, on behalf of the whole team and everyone here, the trading group, the MBA guys, and Breno, thank you so much for being with us as well. Thank you, Toby. I don't know if anyone's interested in checking out your website or looking and working with you guys or anything, what's the best thing to do? To drop you an email?
Well, the easiest thing is, so what we have is like a thing, like you can go to our website, novuminsights.com. You can sign up and play around with the tool. And what the tool also provides you is access to our WhatsApp group, right? So like, so you can do £1 for a week, play around with the tool, but then you can get added to the WhatsApp group and like happy for like people who are really novice just to go, look here, we're going to put out blogs on how you organize like a MetaMask account and then begin setting up all of that kind of stuff. But there's a lot of savvy traders in the group as well, so like you'll get like interesting trading tips, and a lot of it is tradable on Coinbase and FTX. And I think it's all very intuitive, right? Like gradually like the software is being built out. And yeah, but I'm sure people, the moment every time people discuss the Bitcoin price and where it's moving, if that's all you want it, people will in the WhatsApp group be going, whoa. So it's a good way to just get informed about whatever like random thing is going on.
That's great. Thank you so much. And I'm wishing everyone an amazing Sunday and the rest of your weekend. Thank you, Toby.